Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at that part of the financial markets or investment markets that's focused on those individuals that have their TT dollars and US dollars and are looking for lower risk type investment. We're talking, of course, about fixed income opportunities, be it fixed deposits or similar type investments or traditional bonds. So let's take a look at what has been happening in both the local and US dollar space for fixed income opportunities and what investors can expect in the coming months ahead. So turning firstly to that local aspect or the local part of the market, TT dollars, of course, we can see one of the major changing trends in recent times for fixed income markets has been that reduction in inflation or official inflation data. In fact, headline inflation, which would have peaked sometime in early 2023, is now in that green line down to about 5.7% as at the end of May 2023. One of the major pain points for consumers and investors in particular in recent times would have been that food inflation number that has come down to just below double digits now at 9.7% as at May 2023. Core inflation expectedly a little bit more stable down to 4.8%. Now, with imported inflation seeming to cool down as well, and we look at some of that data very shortly, we can expect and anticipate that there should be further cooling of inflation, and that downward trend should continue into the subsequent months, which is certainly positive for consumers and investors alike. When we see how that inflation data or trend has affected the Trinidad and Tobago yield curve, well, there really hasn't been much change while inflation rates were going up, nor has there been much change as they have been going down. When we take a look, for example, at that 5-year point on the government of the Republic of Trinidad and Tobago got TT dollar yield curve, we can see that from December of 2022 to June of 2023, the 5-year yield curve, yield point rather, would have increased just a very marginal 10 basis points from 4.06 to 4.16%. At the 10-year point, fairly flat from 5.18 to 5.2%. The most pronounced change really taking place at that two-year data point from 1.75 to just about 1.94%. So roughly a 20 basis point change at the short end of the curve, but really all steady as we go ahead with inflation coming down. But again, inflation is lower inflation, very positive for the consumers within Trinidad and Tobago. So what can investors expect within fixed income market indicators? Well, cooling inflation remains fairly likely or increasingly likely, particularly with consumer staples producers and distributors indicating, for example, Nutrimix and National Flour Mills, that their prices will be adjusted down in the range of about 10% going forward. So that should also ease up some of those price pressures for consumers. Stable interest rates remain very likely, particularly given the fact that most of our inflation remains imported, and the Central Bank of Trinidad and Tobago would have kept rates steady, focusing on economic activity stimulation versus price stability throughout that inflationary period that would have just occurred over the past 12 months or so. In terms of bond issuance, well, there continues to be the prospect of limited bond issuance for investors looking for those bond opportunities, given that there would have been a marginal surplus in the fiscal statement or standings of Trinidad and Tobago, given the Minister of Finance's most recent pronouncements, and that there should be a smaller than projected deficit going into the end of the fiscal year. And of course, stable credit ratings for Trinidad and Tobago appears much more likely, given that Moody's in its recent announcement would have actually upgraded the outlook for Trinidad and Tobago's sovereign credit rating from stable to positive. So certainly positive indicators all around in fixed income markets in the TT dollar space for fixed income investors. When we turn to the US side of things, again, a very similar trend. We can see that inflation has continued to slow. The most recent data which we would have received in terms of the consumer price index in that yellow line shows that the inflation rate would have fallen to just about 3%, with the PCE or personal consumer expenditure index stabilizing at around that 4.5 to 4.6 level as well. So certainly inflation at the US level trending in the right direction, and that will bring, or that has brought about some stabilization in terms of US Treasury yield curves, or the US Treasury yield curve, where we can see not much change from the start of the year to present date, as at 18th of July, for example. The 5-year point on the US Treasury yield curve would have been stable at just around 4%. Marginal increases in the 10-year yield from 3.78 to 3.88%, just about a 10 basis point increase. Some shift upward in the 2-year point from 441 to 475, but again, investors and market participants will be looking on at the U.S. Federal Reserve's decision later this week as to where interest rates are headed. Speaking of the U.S. Federal Reserve's decisions, they would have paused in their last rate announcement interest rates at that 5 to 5.25% level, and of course, this Wednesday they would be making their next announcement as to whether or not interest rates or the U.S. benchmark interest rate would be increasing or whether it would be continue to maintain at this current level. So in terms of that outlook for inflation and the bond market at the broader global level, well, what can investors expect? Well, that cooling inflation trend certainly seems to be intact for the time being. There is that increasing likelihood of peak US dollar interest rates, which means that bond prices may start to stabilize and perhaps increase with yields falling in subsequent periods. That is further supported by relatively resilient economic data coming out of the US. And again, that economic resilience is a bit more likely where despite initial concerns of recession, there is now just concerns of a weaker short-term growth as opposed to actual negative growth in the U.S. economy. Still some lingering concerns about credit quality given the high interest rate environment and refinancing environment. However, more indicators suggest a positive fixed income outlook as opposed to anything that is adverse or of extended worry for fixed income investors. So with that in mind, what should those fixed income investors do if you have that cash and you're looking at fixed income opportunities, whether it's short term or longer term? Well, you could consider TT or US dollar income mutual funds, fixed deposits or equivalently repurchase agreements, both in TT and US dollars, where rates are currently quite attractive. You could look at investment grade bonds, both government of the Republic of Trinidad and Tobago and US Treasuries as another example. That yellow dot in the TT dollar space suggests that there is some questions about availability, not necessarily the attractiveness of that particular type of investment, as opposed to the US dollar space where the menu is much broader and much more available. And similarly for speculative or non-investment grade corporates, for those investors who are willing to take a bit more risk, well, you can consider that space as well, given that there is going to be a likely stabilization in U.S. interest rates over the next few months. Again, that yellow dot suggests some concerns about availability and not necessarily credit worthiness at this point in time. So certainly at this point in time, all indicators seem to be pointing to a more positive fixed income outlook for investors. So why not take advantage of it and talk to what your preferred investment advisor, like Bourse, about what opportunities are available for you. Well, that's it for this week's edition. For more information, you can give us a call at 226-8773 or to Bourse, email us at invest@boursefinancial.com. And of course, you can check out our website where all of our research is absolutely free at bourseinvestment.com, and catch this article in the business section of today's Trinidad and Tobago Guardian newspaper. Stay safe, happy investing, and we'll see you next time on the Bourse Report.